Hey, what's going on? Good afternoon, my YouTube family. Uh, this is TerrenceRe, and I'm back at you with another video of what am I trading? Vertical spreads or vertical spread rather in Caterpillar, and we're gonna go over some technical analysis of the market. I posted the trade yesterday, so we're gonna go over the anatomy of that trade, what put me in it, what was I looking at, and possibly taking some profit today. Maybe we'll ring the bell. We're gonna talk about that right after the buffer. So right now we got the VIX futures. I'm looking right over here at my watch list. The VIX is up. VIX is up a percent. You see a whole percent. We got the S&P futures down a percent. The Russell futures are down almost 2%. So basically, they're leading the way. So once like I said, when I'm looking at and I see the small caps leading the way down, and the rest of the market generally follows their direction most of the time, not all the time. So we got a nice down day going. And with that being said, with the S&P 500 down, bonds are down, notes are down. We got oil down. Oil is down almost 4%. Let's take a look at that chart. See, we got a nice big red candle working today. See that? Had this bull flag right here on this move. So you had a up move, pull back up. And it kind of made a higher high right here. So then you got a low, a high, and then we made lower lows. So it's possible that oil could be continuing to slide to the downside. Now, generally, we're probably going to get some support right here in the oil futures. I would say right here, right around 80. And let's see if it powers through that. If it goes through 80, your next level is going to be right down here at 76. Anytime I see oil down, I like to come look at the XLE. You see XLE, which is the energy sector, is down 1.5%. So we pull up that chart. You can see right at a Fibonacci level, right on cue. You see this? You guys should be able to see it in that maroon light color right there. My 3618 on so it hit a fib level, and we got this little pullback right here. Now I do think that it didn't hit the last level. I got another level up here. Now I'm not trading it. Sometimes I just look at this. I look at different charts and I chart them. You can't trade everything. You got a lot of capital. You got that SBF Sam Bankman Fried capital. If I could make my own coin and just make it out of thin air and create my own currency and then just do whatever I want. Yeah, I'd buy everything every time I see. But yeah, so I got another level up here. Yeah, I'm clowning a little bit because he just was allowed to do whatever he want, and he's still walking around free. But I might do another video on that. But so here you go. The next level up on XLE is $99. So it's possible it could go up there and hit it. But you see how it hit right here, and we got a wick. And what they call that, I think that's like a hanging man candlestick. And then we got this down move and this gap down today. So let's take a look. The financials are down. You say your financial sectors. So generally when I see something like when I see the financials down and I see XLE down, those are indicators for a down day for me. So I don't necessarily have to see any chart. I can come over here once I see volatility is up, and that's the VIX and the VIX futures, they're up, and I see all my indices down: S&P 500, Nasdaq, Dow futures, Russell, and then you couple that and say the bonds are down, the notes are down, Oil is down, gold is down, and the yen is down. And you may say, so with the yen, you may say, what is that? Why does the yen matter so much, right? So the yen is down. Generally, that means the dollar is going to be up. That's just one of those things. I think I can pull up a chart of the dollar on here. It's possible. Let's see. Here you go. And so you see we got a green candle on the dollar. So the dollar itself had been selling off, which is one of the reasons why you had seen the market going up the past few days. So you see the market, you see the dollar coming down, and so we got an up down a dollar so far today. Now, with that being said, um, if I'm looking at this, do I think that the dollar is going to continue to go up? I don't really know, to be honest with you. You see right here, we at a nice support level. And so we got a bounce today. Don't necessarily mean that it's going to continue to go up. It could just retrace a little bit up into here, and then we get another flush. Uh, but those are the things that I look for to tell me what's going on in it. And I added Bitcoin. So, with Bitcoin has been moving with tech for the most part. All the crypto guys out there. And so far, now it may decouple at some point and become like its own thing. But right now, for me, Bitcoin is just a tech stock. It's not. It's trading with tech. It's not a stock, but it's trading with tech. So if Bitcoin is gonna move just like a tech stock, you might as well own the stock. You might as well own a tech stock. Now, if you're one of those, and if you believe in it, and you like, oh, it's gonna do this, and you have some people that's in it, they're holding it because they believe in it. I don't believe in nothing. It's all about what you know, mathematically and scientifically, and that's exactly how I trade. So, with that being said, let's get to the trade. I posted this trade. So once again, when you follow me, you'll see the trades that as I'm doing them. Now, any trade that I do, if you're going to take that trade, take it at your own risk. Ain't no guarantees. You know, yeah, you could lose money on the trade, whatever you put into it, right? So right here, you'll see I got 3 positions on right now. Here's the trade Caterpillar. I did what I did an in and out spread, or that's a vertical spread, and I bought the spread instead of selling the spread. So, and you may say, well, why did you do that? Let's pull up the chart of Caterpillar and let's talk about being a contrarian and some of those traits and why to put certain trades on. If you're looking at this, now remember the name of the game is to buy low, sell high. So if this stock, just looking at this stock, if somebody asked you to be like, is it up or down? If you don't know anything about anything, you looking at it, you probably just be like, oh, it's up, right? So this came up on the scan, that I run or that, and it's showing me that this stock, if we look at the last year, this stock is recently was right at the high, a 52-week high. So why wouldn't you want to short that? Most people want to buy something when it's already ran out. If you ain't catch it here, you would have made it if you caught it. Even if you ain't catch it here, you could have caught it here, maybe even here. But it makes no sense in my opinion, to be buying here. I want to buy when it's down and I want to sell it when it's high. So, and you heard me say I bought a vertical spread. I bought a put spread. When you buy puts, you are taking a short position in that underlying that you're buying the put in. Now, let's come over here and let's look at the option chain, the trade tab. Now, I went yesterday, it was 44 days, so I was right here. You may say, normally I trade in the monthlies are more liquid, but for this particular strategy, you don't necessarily have to be in the monthlies. And especially if you know how to work an option trade. Like what you should be paying for that particular trade. Um, if you come 29 days, that these options are $10 wide. So that means you got to put up $1,000. But so if I were to come here, generally I like to go one in the money, one out. Now, if you're looking at that, that would cost me 385. So not necessarily so and that means that I would be able to make a profit of $615. So what you do is, this is called the box, right? 230. You may hear some people call these box spreads. So you got 230, 220. So the difference is $10, right? If I pay 385, then that means that you subtract the 385 from the 10, that's going to leave you with 615. That's how much you can make on it. That's the difference. And it tells you down here, max loss, max profit. But I didn't want to do a $10 wide spread. I wanted to do something a little smaller. Let's clear that out before I accidentally send it. So right here, if you come down, I wanted to do a $5 wide. If I could have got with a stock that's 228, generally you're not gonna get dollar wides. Unless you're like in the SPY. Like I could come in the SPY, right? And I could come over here and go 29 days, and you see that dollar wide. So I could do a $2 wide. I could come here, and pay about $1. Let's say 92 cents. That's ideal for these type of spreads. I throw these on, just left and right, right? But on the larger stock like this, and it's not as liquid, but it's liquid enough. And if you come over here and you look at on the TastyWorks platform, when I pop this little cog out, you see where it says LIQ, which stands for liquidity, and it has 3 stars. So I generally like to do trades in underlines that have either 3 or 4 stars liquidity. So what that means is, me being able to get into this trade, I should be able to get out of this trade. You got to buy it to get in, and I'm going to have to sell it to someone to get out. So at 43 days, you can see I bought one. Now yesterday it would have been here, right? But today, because it's down on the day, that's where it is. I only paid $225 for this trade, which means that I can make a max profit of $275. And I'm already up, man, I'm just up about $37. It's been fluctuating today. Now, let's go back to the trade tab and let's talk about it. If you just buy put, let's say you just buy a put, you come out here and you buy a put. You say the market's going to go down. I'm going to buy a put. What delta? I always choose my options by delta. What delta would you choose? Meaning, when I buy puts to where I think the stock is going to go. So if you think it's going to go to 215, you pay that. You're going to pay $490 for it, right? Now, the only thing about that, you see down here where it says negative theta, almost a 10. It's like 9.9. That means that this option is going to start decaying from the time you buy it. It's like buying a car. So when you buy options, you need to be right directionally. Now, buying this put will allow you to make more money. But if you go ahead and you sell a put behind it, that's like capping. That makes it cheaper. So now it's only $5 maximum. You pay $110 for it. So the most you can make now is $390. But look at that theta number. It's under 1. That's basically almost like 0. So that means that you've taken the decay part out of it. And that's the whole point of doing the spread. You take the decaying factor out of the option that you're buying. So you basically, because you say, well, how does it do that? When you sell options, decay is on your side. Your selling option, so your positive theta. So if I was to put if I was to take one of these headers instead of having delta up here, if I was to put theta, let's see, change this to theta. You see how I bought this time decay. Excuse me. I bought this time decay, this negative 9.9. Now right here, I'm selling 9.1. So that's the difference down here. So basically, I canceled out almost the theta. So now I'm not losing money on decay because I canceled the decay out by putting what they call a wing on here. Hey guys, hit that like button, hit that subscribe button. I'm going over some stuff that people not gonna go over with you, not for free, right? And so all I ask is that you watching the video, like it, share it, and then I'm gonna keep getting busy just like this. So you got so, and that's the whole point of doing the spread. It's cheaper and it takes the decay factor out. And you may say, but the con is you don't make as much money. If you don't sell this particular put and you just buy it, look at the max profit. You say like 21 grand, but that mean they got to go to zero though. Right. So you got to be right directionally. You need this to go your way probably in the next, I don't know, probably 20 days or so to really make some money. Because if not, you could lose the whole thing. You can lose the whole thing even with doing the spread. However, the time decay is not against you. And the way I set mine up, I even have a little bit of positive time decay because that's why I go in the money. If you look at this theta, now you see when you're in the money, you see how you buy if you bought this one and you sold this one, you see how you got this? So that means you got positive theta decay because you're collecting 10.3 and you're buying 9.6. So you actually put theta decay in your favor at the onset of the trade. Now, as the trade moves and as the market moves, these numbers will change, right? So like as of right now, if I go back to my position tab, you see where I have a positive theta. And one of the major rules is you don't want to, not that you can't, you don't want to have a portfolio full of negative theta because all that means is that you're losing money to hold positions. And you want to have a portfolio, whether it be one of your 401k, whatever it is that you're managing, you don't want to be losing money just to hold a position. Now, when you hold stock is what you would call, what I was taught, hard delta. Now you may hear I call them hard and soft delta. You'll hear some people say static or dynamic delta, which to me is like, you can use those type of terms, but I'd rather just say hard and soft. And you say, well, why hard and soft? If it's hard delta, it don't change. If it's soft delta, it'll move. Options, when you sell options or buy options, you're dealing with soft delta, and the deltas can move. When you're buying stock or buying futures outright, you're dealing with hard delta. That means the delta doesn't move. So if you buy, like 5 shares of Tesla, that means you have 5 deltas, positive deltas of Tesla stock, and there is no theta attached to it because the stock won't lose. It'll lose value on the price going up and down, but your position isn't losing value like an option would. So you just want to keep that in mind when you're looking at your overall portfolio. So I will do a video on portfolio management. That will be a long video, and I'm thinking about how I already got an idea how to do it. But that right there is the sauce though. So that may be a class or something that I do that I may like charge for, because that's really the sauce. Like, that's how the what they say, that's how the sauce is made. You can't give away the recipe for free. But so anyway, so this is where I'm at with this trade. Once again, this is an in and out spread. All that means, in and out just means one in the money, one out of the money. It means you buy the one in the money. In the money just means, if you're looking right here, you see right here that little orange ITM, that means in the money. So if I was on the call side, meaning, and I thought the stock was going to go up and I wanted to buy a call spread, I would buy this one, because everything up right here, you see where it's kind of shaded, that would be in the money. Then I would sell one out of the money. And here it go. And so you see how the deltas are positive, because this is a bullish trade. Now, you delete that, delete that. Now let's go here and go one in the money, one out of the money. Now you see how the deltas are negative, because that means it's a bearish trade. Got it? And then that's all it means by in and out. You may hear some people say, call these in and out spread. That's what they mean. Or box spreads. This is the box. Or vertical spreads. You can buy them or sell them. This particular case, I bought the put spread because I have an assumption that the market is going to go down. And as the market goes down, it will increase. Hopefully, the IV rank will increase. It'll increase in IV, and that will increase like the acceleration of my profit. So yesterday it was here, and I got the gap here, and all I did was take the other side, just be a contrarian, right? And so we're looking. If you're looking at this trade right now, we go down and look at the MACD. We got the MACD has a crossover right here on today. You see? So this may work out pretty well. So I was thinking about like closing it and putting it back on. And you may say, why? Because I still think we're going to get a pullback. So I was thinking about closing it, taking a little 40, 50 bucks. And then when it pulled back into here, then selling a call spread, coming on the other side of the option chain and then selling the call spread, because the IV rank is up higher. Then I could sell the options and then put the time decay on my side. So that's that. And also, like I said, if you're just looking at, just some basic technical analysis, find your indicator. Yesterday it was overbought. You can see right now we're at a 64 on the RSI. Yesterday I think it was like around 71 or 70. When things when things are overbought, you tend to start looking at where you can short. When things are oversold, you start looking at stocks that you can then buy and get long. If we looking at the rest of the day, the advanced decline line right here got a negative 306. So, the majority of the stocks in the S&P 500 are down today. Apple is up. You see Apple look like it, and it looked like it's trying to move up a little bit. So, this little down move may be short lived, but that's fine. I'll sit. I got 43 days in that trade, so I'll sit there. Let's take a look at. I don't really see anything on this chart that would have me to think that, like, hey, to put a trade on either way. On last week's video on what am I trading, I had the Iron Condor on and EWZ. I still have that on. You see, it's up like 18 bucks right now. I've been in that position 7 days. So as you guys can see, you can put, these are trades that you can put on and work a job, because I do, and you don't necessarily have to sit there and babysit the trade. I can manage these trades from my phone. I can go ahead and set up take profits. I think I got one on EWZ. No, I don't. But it's easy for me to do, to close it out. I collected in premium 102. And I'm probably looking to capture about half of that, about 50, 51 bucks. And these are like just strategies that you can put on. Like these ain't day trading strategies. These are, like I said, this channel is for basic beginner type stuff. I don't advocate day trading at all. You can lose a lot of money day trading. You can make a lot of money too, but I don't generally. Every now and then I'll do some if I see something, but I don't really advocate doing that. In my opinion, it's hard to time the market. Um, I like to do trades that if I did them 1,000 times, I'd win, 60% of the time or 65% of the time. And that's just by doing high probability trades. And that both trades that I've shown the past 2 weeks are high probability trades. This EWZ, we'll close this up. As you can see, we had this down move here, pull back into here, hit support, a down move here. Let's look at the MACD just to see. So on the histogram, we had divergence, from here to here. So then you had a little up move here, and now here we are. And in technical analysis, I want to say this is called like, look what it looked like a megaphone. So you kind of got like an expanded megaphone. It gapped down below it right here. And so we down here at 28. I think my put spread on the bottom is down here right around 26 before it challenges me. We can go to the analysis tab and take a look at it. So I just needed to stay within here and keep decaying. That's what's going on. I just needed to stay within here. And you can see right now it's showing I got a 83.6% chance of it staying within this range. So I'm good. That's all I wanted to do. This is a neutral position. And in this particular position, I'm just making money on time decay, time and theta decay. So just time going by when you sell options, you can make money. And it kind of coincides with the theta as well. So that's where I'm at. And I've been in it for 7 days. And so we'll just continue to sit and we'll continue to look at this down position and Caterpillar. And maybe next week we'll try to see if we'll put something else on, if we take one of these off or something like that. If you guys got a stock or something that you think you wanna see me mark it up and tell you what I think, where I think it's going, what would I do, what type of trade would I put on, drop it in the comment section, and then I'll go over it and I give you my take. I can come up with a trade for anything. I don't care if it's like, if I can't figure out which way it's going, then we just gonna get neutral. We'll put an iron condor on it. We'll put a strangle on it. If I think I know where it's going, we'll put a butterfly on it. We'll break the wing on it. We'll go through all of those things. And so I'll put some condors on it. So with that being said, guys, I hope you got something out of this video. Hit that like button, hit the subscribe button, share, comment. And with that, guys, I'm going to be out. Peace.